Yep, cool.
This meeting is being recorded.
All right, let's get to it. How's it going, guys? This is Forensic Forex with Deontay, and this is Forex Fridays. I know the schedule has been changing a lot as the seasons here in New York start to change, spring and summer. A lot more things I got to do around at the farm to get prepped for the hotter season. So normally we start at 8 o'clock New York Eastern Standard Time, and I've been pushing it back an hour. You got to drive and stuff, and didn't have time to get here on time, so we started it at 10 today. Sorry about that. So tonight we're going to be talking about a few things. We're going to do our classic weekly range review. We're going to be talking about DXY, EU, and UCAD. And we're going to be looking at some ideas during the intraday. Then we're going to talk about dead zones, why they're important, what they are, why traders should be, concerned about dead zones, and why we should be utilizing them. The next topic after that, we're going to be talking about the Asian session range and how to utilize it and its characteristics and how it impacts other kill zones. And then last but not least, we're going to talk about counter trend candles. So let's get into it. Yeah, I'm doing good. Thanks for asking, my man. Who was that? Rick Sean? Yo, appreciate you for asking, man. Like, I'm doing good. Can't complain. Long day, but hey, it is what it is. We're doing good. So let's start off with the DXY. This is what we talk about every single week, right? I want people to always know this stuff because I feel like this is a very cookie cutter approach when it comes to finding intraday setups. Even if you have no skill set, you're still someone new. Even if you're a veteran into trading, you have a couple years in the game, this can still help you understand things a little bit clearer. And I always like to start off with this topic. I will never change this as a topic. So, weekly range review starting off with DXY. So, Sunday to Friday. What you see on my chart here is the weekly opening price. Now, many people may ask, what is so important about the weekly opening price? What's so important about the weekly opening price is that it is our premium and discount levels without any indicators. It tells us when the market is overbought or oversold. So it gives us more of a indication on where we should be looking to sell or we should be looking to buy. Just looking at this chart, no kill zones, no PD arrays, nothing of that sort. Just looking at the chart as naked as you can see it, you can see where the buying is occurring and you can see where the selling is occurring. We can see clearly, it's night and day, that they're buying below the weekly opening price. I know it's hindsight, but hindsight is the only way we as traders get experience or exposure to what the market is going to do. Then moving forward, we're going to use that previous data to understand how we could find setups based on hindsight. So if anybody tells you hindsight is not worth your time or worth your while, they're lying to you because hindsight is definitely one of the ways traders can study. With the hindsight that we have this week, we can see Monday, even Sunday too, but let's say we're not looking at Sunday. Monday, Wednesday, and Thursday, we could see price was below the weekly opening price and gave some type of sponsorship to the upside. Is that a coincidence? No, it is not. On the other side, vice versa, we could see somewhere along the lines on Tuesday and Wednesday, there was some type of selling opportunity. And where is that selling opportunity occurring? Above the weekly opening price. That's not a coincidence either. So just frame this in your head and understand when you take this off, this looks like nothing, right? Think about that. But as soon as you put that one line on the chart, and you also put in the day dividers as well each day, but that one line on the chart, it just makes things a little bit more clear. Not saying you get all the answers, but you start to see where you should be picking where to be a buyer and where to be a seller. That was that large day on Wednesday when the Feds had that interest rate meeting and the Fed conference, and everybody thought it was over for the DXY, right? One day, everybody just sees one down day and they lose their mind. And I'm like, you haven't even seen what's going to happen after or the next couple of days either. One down day, everybody was like, dollar's going to crash. Dollar's crashing out. It's not crashing out. It's just getting ready to go long again, as we can see here. So let's move on to EU. So moving on to EU. So now we're going to talk about some intraday stuff. We're going to talk about the New York model, London model, and small things that we use to be successful intraday. For those that don't have the time to swing trade, or don't want to swing trade, and you have actually all the time in the world to actually intraday trade. Correction, you have more time to intraday trade. This is for you mainly. Looking at the chart, let's take this off. Looks like a whole bunch of nothing really. But as soon as we put this one line on the chart, wow, you see where they're selling and you see where they're buying. You see how sensitive price is to certain price points. You can see from Sunday and Monday, it was kind of threading the needle for a while. I don't like to trade Sundays. See that? Look at Sunday, nothing. Monday, yeah. Tuesday, things start to move, start moving again. Wednesday, large moves because of the news. Thursday, news event too, right? PMI, and then we got more high impact news as well going into Friday. But notice where they're selling above in a premium. They're buying below in a discount. Tuesday, there was some buying opportunity. Wednesday, large buying opportunity. Thursday, large selling opportunity. But look at where they're selling. Look at where they're buying. That's where I'm really trying to paint the image for you guys. I'm trying to drill that into your head and be like, yo, I need to be hunting for certain setups when the market is either in a discount or at a premium. New York model on Monday. Let's take a look together. So we're going to be going back right before 7 a.m. And the New York model, if you got a pen or paper around, right, write this down because you're going to hear the steps. I do have a video on it already on the channel, but if you're still new to this model and you hear it for the first time, this is the steps to the model. You're taking 5 a.m. to 7 a.m. This is a dead zone. Now, that's our next topic. We're not going to get into a lot of details right now, but we're going to talk about it in the next topic. This is our dead zone. This is the London lunch. I want to utilize this time period, these couple of hours here, to help me frame a setup for New York session. That's all I'm doing. And I'm looking for swing lows and swing highs, or even double bottoms or double tops or clean highs or clean lows that form within this session that are unbroken. So we have this. That's unbroken. That's a swing low formation. 1, 2, 3. Now, might be a little more for some people. Some people may not know what a swing low is, but so we'll take it slow. A swing low is simply a candle between two other candles. So it takes 3 candles to make a swing low, or 3 candles to make a swing high, or 3 bars, right? 3 bars. This low is higher than this candle's low. This low is higher than this candle's low. So this makes that the swing low. It takes 3 amigos right there, 3 friends, 3 pals to make a swing low. So that's sell side liquidity. Let's mark that off. So we'll just put a dollar sign underneath it. Sell side liquidity. Do we have any other more? We have this one here. We have this one here. We're not going to mark it off because it's relatively equal. It's not broken, but it's relatively equal. So we got one there. Do we have any swing highs? No, we don't. So going into 7 a.m., we're not breaking any swing high during the London lunch period from 5 a.m. to 7 a.m. So we don't mark off anything. So we're just going to mark off the highest high we have on the 15-minute candle at 7 right here. So that's what we're going to use as our buy side. That's what I use. I'm going to use that. Notice where we are in price. Notice where we are. Where are we? Now I'm going to engage with you guys here, right? Trying to get you guys engaged so you don't fall asleep listening to me. Are we in a premium or a discount based on the weekly candle? For those that are attentive, and I got your attention now. Anybody in the chat can say it. Are we in a premium or in a discount for the weekly range? Remember, this is Sunday right here. This is Sunday's opening price. Are we in a premium or discount? Anybody just type something, and I'll wait. Premium. Thank you. Awesome. Someone in the chat said that we're in a premium, which means we're overbought. Price is most likely going to give ideal sell conditions above the weekly opening price. Great. So we got that first stance. That's awesome. Let's take a look at this. Based on midnight opening price or true day open, Are we in a premium or a discount? I'm going to ask a lot of these questions. Based on midnight, this is midnight opening price right here, 0, 0. Are we in a premium? We're in a premium. Good answer, right? We're in a premium. This is 12 a.m.'s opening price, 12 a.m. Mark this off. This is weekly open. So we have a just of it. Weekly open. Cool. Let's take it a step further. This is 7. Oops, sorry. This is 7 a.m. opening price. Are we in a premium or a discount for the kill zone? Anybody in the chat? Still premium, exactly. Still P, exactly. Still in a premium. We have a triple confluence here. We are very overbought right now in this case scenario on a Monday. This is cool that it's happening on a Monday. We should be looking for buys or should we be looking for sells? If we had no idea, right? We had no idea on daily bias or draw. Based on what we know about premium versus discount, should we be looking for buys or should we be looking for sells? We should be looking for sells. Thank you. Shout out to the chat. We should be looking for sells. We're not looking for buys. Not saying that won't happen. It could happen. But in a ideal scenario, when you're getting something like this, especially a triple confluence like this, you're above 12 a.m. Monday's opening price, midnight opening price. You're above the weekly opening price. You're above the kill zone's opening price. More than likely, price is going to give you a dynamic selling condition. Let's play it for us. See what happens. Price does this. Price runs our buy side liquidity pool. So there's a purge on buy side. What do we have available after purging buy side? What other liquidity pools do we have? So if this is buy side, what's left? We have, begins with an S. SSL is the acronym. Anybody? Yes, we have sell side liquidity left. Exactly. So we rated buy side liquidity. We purged. Now, all the markets do is purge and revert constantly. That's all this market is doing. It's purging and reverting. And then it's accumulating. And then it's reaccumulating. Then it's purging, then reverting. We're seeing that constantly on all time frames, constantly in all kill zones, constantly on a monthly basis, a weekly basis, purging one side of the market just to run back to the other side. That's what's happening here during the New York session, intraday. It just purged buy side here. We have sell side available. So now we have pretty much a cannonball straight down to sell side. If we're looking for projections lower, this is where we're projecting the shorts to go to. Forget about the entry. Forget about the technique. Just understand we took out buy side. And the most obvious area for price to reach to would be sell side. If I was the market maker, if I had to put on their shoes, I would want to get retail to keep going long. Break retest. I want them to go that way so that I can use them as counterparty for my sells so I could liquidate them. You keep buying, but I'm going to sell. Let's go down to the 1 minute. So everything we just saw in the 15-minute time frame is now transcribed to the 1 minute time frame. I am showing you how to use the 1 minute time frame to find an entry. Not many people do it this way. Not a lot of people are able to go from 15-minute down to the 1 minute. It's a very simple idea. You're reducing the risk. Yes, we can find an entry on the 5 minute. We can. Yes, we can find an entry on the 3 minute. We can find an entry on the 2 minute. I'm going to go down to the lowest time frame possible that I at least pay for based on TradingView. You know, you could pay for the 1 second or the 2 seconds or whatever. The seconds time frame, I'm not going to pay for that because I don't need to pay for it. 1 minute time frame is what I'm going to lose to get my entry to lower the risk. So I'm looking for something very specific. I'm going to be looking for a swing low. This is the entry technique. I'm looking for a swing low that's going to be rated with speed. And what do I mean by speed? I mean a fair value gap, an inefficiency in the marketplace, one-sidedness. It's only offering sell side. And that swing low must be inside the fair value gap. And the entry technique must be forming above 7 a.m.'s opening price. It has to form above 7 a.m.'s opening price. If it forms below 7 a.m.'s opening price, I do not take it because I'm picky with my entries. I'm trying to select quality entries. I want to get the best sell possible. And the best sell possible is not going to happen below 7 a.m. That's ridiculous. The best sell is always going to happen above 7 a.m. in a perfect scenario. Now, the market is not always perfect and it's not always going to give you what you want. But if you wait and you're patient for these opportunities, you'll see how the accuracy of your trading will improve, the quality of your trading will improve, and the drawdown time will probably decrease because we're selling higher and we're not selling lower. Because imagine someone selling down here, they may have to adhere to drawbacks or pullbacks and then a pull down. But if I'm already selling above 7 a.m., likely I'm going to endure less drawdown. The market is probably less likely to trade higher because it's already done its trading to go higher to induce traders to the wrong side. So let's play it forward. Let's zoom in because I'm pretty blind. We're looking for a fair value gap. I'm going to keep playing it candle by candle till we get it. All this time here, we're not hunting any short. We're not clicking short. I mean, like we're not pressing sell. There's no fear of losing. Yes, before this would have been my entry YouTube channel, the New York model video, right? This would have been the entry technique. The first fair value gap that forms to the downside, the SIBI that forms to the downside would be the entry technique. So this in the video that I have on YouTube would be the entry technique. At times, this entry technique is the all be all, right? The end all be all entry. It is the one that turns price around and it goes in the opposite direction. Sometimes it's not. Sometimes price runs 10 more pips higher than this fair value gap. And then it creates the entry that I'm going to show you. Not saying you can't take this because you might want to take that. I don't take this anymore. I wait for something along the lines. Just keep playing it. Right? There's so many going on, right? There's so many forming. So many that forms. And then there it is, right here. Notice it's a certain sequence. There it is. It's a fair value gap, speed to the downside, runs with a swing low. You can even see that this last candle that ends the fair value gap, this candle closes below this candle's low. So we still have more signs that there is sentiment on our side. There's sponsorship on our side. Price wants to continue going lower. Looking at all these candles prior to it, look at all these 1-minute candles. It's all selling. It's all downside. It's filling all sell side, not buy side, all sell side. So a retracement would be due. But I want to see a short in here, right there. Notice how this fair value gap was holding up strong for the entry technique in that video on YouTube that I have about the New York model. But I would pass for that. I'd rather wait for this because that's what my study has been showing me. My conclusions have been showing me this is a lot more feasible. Sometimes this is feasible, but I prefer this one right now. We're going short here, one-to-one scenario. Now, many times a one-to-one scenario can turn into a 2-to-1, a 3-to-1, a 4-to-1, a 5-to-1. You guys know this because you've seen how the market can continue trending off of these pivotal moments. The kill zones themselves, New York session, London session, and Asian session. Those are 3 opportunities where the market may make a pivotal moment and continue trending. It happens all the time. Inside the kill zone, there's some type of movement that occurs, and the market gives a setup, and price just keeps running. It just keeps trending with the higher time frame trend, keeps running. Not saying you're going to get it all the time, but if you stick to this, you'll start to notice that you're on par with the higher time frame trend a lot often. Play it forward. Zoom in. Make sure you can see that we actually did get the entry. We got the entry, right? Price hits that. That's an institutional order flow entry drill right there. Boom, hits it, go short. That's what ICT was teaching everybody, right? As soon as price touches that fair value gap, you go short. We're not looking to perceive, is this full range going to get taken out or get filled in? We don't know. We don't know. How in the world would I know if this fair value gap is fully going to get filled in? I have no idea. So I'm taking the very first chance that I get. The first opportunity to get in that fair value gap, I'm going short. That's it. Now, there will be times where price does hit to the midpoint or the premium side, but I'm always going to take the discount side of that fair value gap and a short. And I'm going to take the premium side for the fair value gap long. And as you can see, very dynamic response off that fair value gap. And what does price target? Sell side. Purge buy side liquidity here. Clean highs. Price comes down, takes out what? Those clean lows. Sell side. Price still has this one down here. Does it get down there? Let's see. It does. It does. Right there. You're up already 10 pips. Probably 10, 11 pips. There you go. 11 pips right there. Scale out. Take something off the table. You don't have to just hold the trade all the way to TP. Because what if price does not get down to your 15 pips or whatever projection you have? What if it doesn't get down to the full TP and it decides to turn around right here and you didn't pay yourself? That's very upsetting. So you got to pay the trader. It's very important. You got to pay the trader. Anything can happen in this market. Play it forward. Look at that. We just left a premium zone, 7 a.m. It went back down to a discount. We just left above the weekly opening price here, Sunday's opening price here. That's Sunday's data. Look at how we're leaving that. We're now in a discount below Sunday's opening price. And now we're targeting what? Midnight opening price. Let's play it forward. Look at that. Price taps right into 12 a.m. And look at that reaction. Comes down, hits it, runs above. So it's cheap for just a quick second, and then it runs back up. So that's the New York model there. Hopefully that was clear and pretty obvious. Now, if you understand daily bias and you understand daily draw and you understand how to find trend, yes, you can fine tune what you're looking for during the kill zones. But if you had no bias at all and you went into this market just like this, odds are the market is going to lead you in the right way most times. In the way that I'm showing you, in the steps that I'm showing you. It didn't break sell side first. Notice that. It didn't break sell side first and then went up. No. It broke buy side first and then went down. So if you had no bias going into this model, you still would have been correct. The market was leading you to the right way already. It was already giving you step 1, step 2, step 3, step 4, all the way to the finish line. It gave it to you. Will that happen every single day? No. But if you are consistent to the model every day and you go about it with no bias, right? This is a pretty broad model in the way I'm structuring it and packaging it to you guys. Could it be optimized? Absolutely. You could place so many different filters on this. Maybe you don't want to look for this setup on Monday. Maybe you just want to look for this setup on Tuesdays and Wednesdays and Thursdays, or even just Fridays, or whenever you're truly available for the market. You can optimize the model in any way, form. Now, just because you think you are optimizing the model doesn't mean you are increasing the hit rate or the win rate for the model, because you could actually be decreasing the hit rate or the win rate for the model. So you got to study and you got to back test and you got to do these things over and over again. You got to do this for at least 6 months. You got to do this for at least a year. You got to do this for 2 years, 3 years. Then you start to see the patterns. Then you can start being very specific and niche to what you want in the market. How else was I able to arrive to an idea like this? Took a couple years. Now, some people may get there sooner because their learning curve might be a lot shorter and they understand the markets. My learning curve was pretty short. I picked this up pretty quick. But over time, you start to see, okay, I like this. Scratch that. Let's move on. Let's go on to another day. So we're going to play it forward. So if you have any questions in the chat about the model, let me know as we're going through it. And make sure the questions pertain to what we're talking about. I don't want to talk about a whole nother situation. If it pertains to what we're talking about, you can ask away. play it all the way through. News, boom. Look at that news comes in Wednesday, right? That's that Fed talk. The Fed talk, conference right here. And then we had the interest rate. So the interest rate remained the same. But this is what I was saying. Everybody was losing their heads here. Look at how they engineered these lows here. Doesn't that look a little funny to you? Look at that. Doesn't that look odd? That looks very strange. Why is the market just doing this? And then all of a sudden it shoots up and then it leaves all of this down here. What's down here? Sell side liquidity, clean lows. The market is going to take it out in the near future. Is it going to take it out in the next hour? Who knows? Is it going to take it out in the next minute? Who knows? But sooner or later in the near future, we know that these lows are going to get cleaned out. They have to be. But everybody here was assuming that, okay, EU was going to go higher. And if you're up to date with the daily updates, we talked about it. I said on the daily time frame, we said, okay, this is either a false break. We said that here. Let's bring it back. Said this candle right here. That was that Wednesday. There it is. Look at that up candle. If you guys have been watching the daily updates, that up candle right there. I said, is this a false break or is this bullish momentum? Because it's only two things that could be occurring here. Only two things. Some people may argue and debate and say, okay, maybe there's a third thing. Okay, it might be consolidation, reaccumulation, possibly. But if I'm thinking about it from the perspective of market trending, because I always look at the market from a trending perspective, I want to see these markets move. That's how I make money. That's how you make money. These markets need to move. They can't consolidate. We don't make money in consolidations. We just don't. Regardless, if you're a scalper, but whatever you may think, we don't make money in consolidations. The bulk majority of us make money when the market starts to move. Right? At the beginning of the month, we were long. We were making money here, right? Until things start to slow down again and reaccumulate. Then a lot of people either getting knocked out of positions or psychologically being challenged. I'm not sure if it's going to continue going long. I wasn't sure if it was going to continue going long because it was taking a while to give us a higher swing low. We finally got that higher swing low and then we run it. I was like, dang. So I guess EU is probably either going to be a false break or bearish momentum. And we stated that. And we stated this here. Is that a false break or is that bullish momentum? And we know that it's a false break because immediately next 2 days, price comes back down and takes out a swing low. And what does it do? It hits March opening price. Right back down to March's opening price. So it hardly went anywhere, to be honest. It went right back to the open. So this candle, let's look at the monthly candle. Look how small it is right now. It didn't really go anywhere. It gave up all its gains. It came all the way back down. It's very interesting when you see it from a day-to-day perspective, but people don't talk about it this way. We need a lot more people talking about it this way, but that's neither here or there. London model. See, that's that Wednesday. Boom, stop. Right here. Go to right before 2 a.m. We're in the 15-minute time frame. We're going to be utilizing a dead zone. We're going to be utilizing midnight to 2 a.m. This is a dead zone. The next topic is going to be on dead zones. So don't worry. I'm going to explain what dead zones are. We're going to be looking for 15-minute swing highs and swing lows that we have available, or clean lows or clean highs that we have available. So we can see here we have a double bottom. So we're marked it off. That's sell side, right? There's no raid. There's no sell side being rated there. Price opens and runs up on the same level. You can see here, but at 2 a.m., price runs this swing high. Notice how this is completely different from the way this happens or this occurs. Look at how it looks completely different. Notice how at 7 a.m. is not running a swing high. The candle at 7 a.m. is not running a swing high. But here, at 2 a.m., that 2 a.m. candle is running a swing high. So we already got a purge on buy side already. Buy side has been ran. This is also, I can't even show it on here too, but this line here is also 2 a.m.'s opening price. We'll just make this line a bit more thicker so we can see it. So that's 2 a.m.'s opening price as well. Where are we as well? According to the weekly opening price, we're above it. Where are we according to midnight opening price? We're above it. Right? MOP. That's the acronym. MOP or SOP. Sunday's opening price or Monday's opening price. We're well above, highly extended going into Thursday. Oh, sorry. I'm using Thursday's opening price. Mistake. There we go. We're above midnight opening price. We're way above the weekly opening price down here. So we're in a premium. We got a triple confluence again. Triple confluence. Not double, not single, but a triple confluence on what day? A Thursday. A Thursday, which tends to be the high of the week if it's bearish. If the weekly range is going to go lower, Thursday tends to be the high of the week. Either Tuesday, Wednesday, or Thursday. Even Mondays, but normally Tuesday, Wednesday, or Thursday is going to be the high of the week. And that's exactly what we saw. Purge on buy side. What are we going to do here? We're going to go right to the 1 minute time frame. This is the London model that everybody keeps asking me. You don't ever talk about it. Yes, I do. Yes, I do. People just don't watch it. You guys are here. Support. Shout out to the chat. Shout out to everybody that supports the channel. Shout out to everybody that's in the community. You guys are here, so you guys know it. But this is mainly for the folks that are in the channel texting and telling me that I don't show the model. Like, I didn't see the entry. I didn't see this. There's no way. You couldn't have watched the video because I've shown it more than like 50 times by now. There it is. Oh my gosh. Beautiful. Beautiful. This is beautiful PDA. Beautiful price action right here. Price breaks that 15-minute swing high or that clean high there. Right? You can see it on the 1 minute. There's a double top on the 1 minute. That's what it looks like on the 1 minute. We're above midnight opening price. We're above 2 a.m.'s opening price. We're above the weekly that's down there. We also have news, right? PMI flash. I'm not concerned about the news. Many people ask me, do you care about news? Not necessarily, because the news is the excuse to move the price action faster. And if I know I'm in sync with the market, the news is most likely going to put me into the market in the correct direction, not the wrong direction. Whoops. Come on, TradingView, do your thing. There it is. Fair value gap, swing low, entry idea. I said it again. I've shown it again here live on the Zoom. It's going to be posted on YouTube. Can't say I didn't show you. That's the entry idea. We're going short again. Right there. There are several reasons why we're going short. One, we just had a raid on a buy side liquidity pool on the daily time frame. That was this right there. That raid here, that swing high. Raid on buy side liquidity pool. The markets are going, this is another tip. The markets are always going to give great opportunities when there's casualties. And what do I mean by casualties? When people are getting shaked out of the market, when people's orders are getting ran heavily. A lot of orders above that swing high here, this swing high 1, 2, 3. Anybody that was short and has a stop loss above that high, that swing high, they've been raided. They've been knocked out of the market. Now, that may be very upsetting to them, and they may get back in short again. Some may even sit to the sidelines and be like, you know what, I'm going to reevaluate the market, which is what I would do. I would sit on the sidelines and reevaluate the market. Others would probably go long instead. Some people would jump the gun and be very aggressive and say, you know what? After breaking this high here on this Wednesday candle, I'm going to go long. Sometimes you'll get it right and you get your flowers, and you tell all your friends, I went long after this and blah, blah, blah. And it feels good to be the dude that got it right. Of course it feels good, but does it feel good to be the guy that got it wrong? It only counts when you get it right. But there's a learning opportunity in everything. Always a learning opportunity. No matter how little, how big, there's always a learning opportunity. Price tags it. There we go. That's the entry. And we hold. Now, I do understand. There's drawdown. There's drawdown. Do we expect drawdown? Yes. Why else do we use a stop loss? If we didn't expect drawdown, we would never use a 15 pip stop loss. We would just use no stop loss. Or we would use maybe a 1 pip stop loss or 2 pip stop loss because we believe that when price hits that price point where we get in short, it's not going to go any higher. Impossible. We know that there's going to be drawdown. We know our entry is not always going to be the exact turning point. It's not going to be the exact turning point where it hits it and then it goes short. You sometimes get those scenarios and it feels good. It really does feel good when it plays out like that because it's just very beautiful. It's a very beautiful thing to see. It's not a beautiful thing to see this and then profit. It's not as beautiful. It's not as clean. But nevertheless, we still get the setup and we hold. Right? You believe in the model, you hold. If you can't hold this, look at that. Oh my gosh, this thing melts, man. This thing melts. And this model happens so often. We've done, I don't know, so many Forex Fridays. We've gone through so many examples of this same pattern happening over and over on different pairs too. It's not like it's happening on just EU and I'm cherry picking. We've switched it up. We talked about NU. We talked about UCAD. We talked about DXY, U Swissy, GU, Gold. We talked about so many pairs over the last couple years. We talked about all these pairs. So it's not that I'm picking on one pair. I'm giving you variety. I'm giving you flavors. I'm showing you that it happens in all markets. Now, I'm not talking about crypto. Crypto's a whole nother beast. I still don't understand that. That's a whole nother market that I don't understand and how to apply the kill zones. I've been studying in it a little bit, but that's a conversation for another time for those that trade crypto. But I specialize in fiat currency, Forex. I trade Forex. That's all I know. Okay. That's all I know. Master in Forex. That's what I do. Not a jack of all trades, master in Forex. Price goes short. What happens? Price purge. Once again, price purge buy side, revert sell side. Amazing. And it sells all the way down into the news. Look at that. You even had an idea what the news is going to do. Market makers already told you. Look at this large candle down. This is about 20 minutes before the news. You got this large candle that sold all the way down and pulled back. That is like a small indication that the news is most likely going to keep pushing price lower. It's little things. When you've been doing it for a couple of years, you see things like this over and over again. This large tail down here, right before the news drop, the market makers already in short. They're heavily in short. So when that news drops, trust and believe that this tail is going to be refilled. It refills the entire thing. And what is it aiming for? Look at that. What's that? The weekly opening price. Hits it. Look at how it hits the weekly opening price. Look at how it hits the weekly opening price and turns around. Now, I'm not trying to justify and say the weekly opening price was the end all be all to why price turned around. Many people may argue and say, hey, there might be a 1 hour order block or 1 hour mitigation block or whatever on the higher time frame, which is true. But just based on the indication that I'm showing you here, the natural indication of a weekly opening price, look at how it does it right there. Hits it and runs higher. And it runs pretty strong, honestly. About 25. Let's see how much higher it runs higher. Let's see if it runs higher. It gives a significant dynamic move all the way back up to fill in what? All this sell side. So if I look at this on the 5 minute, probably looks like what? A liquidity void, right? Haven't heard that in a long time. I haven't said that in a long time. A liquidity void. Look at this. The last up close candle to the last up close candle. Look at that liquidity void. It's all sell side pressure, regardless of this. And when I say sell side pressure, I'm putting that in quotation marks, you know? I'm not saying that that's what's moving the market pressure. It's not sell side pressure. Markets are going short because the market makers want it to go short. Ignore this one candle here. The small up candle here. Let's say this wasn't here. This last up close candle to that last up close candle, the market's only been delivering sell side the entire time. Look at how it reprices that. Reprices right into it. Keep playing. And it goes short. Isn't that interesting to see? It is interesting. It's very fascinating. But to an untrained trader, they have no idea what's going on. They're always going to ask questions. They're always going to feel lost. But until you put the hours in and you study certain people's material, then you start to understand. Not saying that you only have to listen to ICT's material. You don't have to just look and listen to Wyckoff's material. You don't have to just only listen to Larry Williams' material. And whatever other trader you perceive as, you know, someone that has high quality education in the Forex community, you take a little bit of everybody and you apply it where it can be feasible and actually make sense. This makes sense. Look at that London model. This is Thursday. This is going into the New York session. It's sold all the way down. Look at that. Look at these clean lows here. All the way down there. Give me 1 second. I just gotta blow my nose, man. Oh my lord. Give me 1 second, guys. All right, back. Clean lows. Look, those clean lows are still there. Let's keep playing it through. Whew. All right. Notice those clean lows were taken out there going into Friday. We have a Friday New York model. Let's take a look at that. So we're going to go in the 15-minute time frame. I'm going to bring it back just before 7 a.m. Oh, we didn't even get there yet. But look at those clean lows rated. Even that low here on Tuesday. The draw is always going to be previous daily high or previous daily low. Like, that's my first educated guess from a daily perspective. Are we taking out yesterday's high or are we taking out yesterday's low? Now, sometimes you'll get an inside bar, meaning that candle does not take out the previous daily high or the previous daily high. Previous daily low. It's just stuck inside a range. And that candle appears probably like 1 to 2% of the time. Or you get an outside bar. And an outside bar is the candle today takes out the previous candle's high and low. And that happens to appear probably like 2 to 3% of the time. You'll see that often. Not that often, but in that statistic. 7 a.m. right here. What are we utilizing for this session? The London lunch. I'm not worried about the news. I was not worried about this because look at where it's happening. It's happening during the dead zone. I wouldn't even be trading here. Wouldn't even be trading here. Look at the price action there. Come on, guys. Come on. Wouldn't even be trading there, but you'll have other folks tell you that you can. Man, charts speak for itself, man. Charts don't lie, man. Charts will always speak for itself. Everybody can say what they want to say, but when it comes to talking about those charts and showing charts, nobody can show me a chart. 7 a.m. opening price. Price rates what? Buy side. Right here. Rates buy side. But I want to show you something. Red. We are below the weekly opening price. There it is. When this is happening. Now, in this case scenario, would it be ideal to look for a short? No. No, it wouldn't be ideal because we know ideal sell conditions happen in a premium. So all the ideal sell setups already happened. Happened on Monday, happened on Thursday. This is not an ideal sell condition, right? If this is where price raids buy side and then goes short, it's not an ideal sell condition. It is a forced sell condition. This is where I've been telling you guys all the time. Traders will be forced to sell in a discount. It is not ideal to selling a discount. You are being forced to do it because you have no other choice but to sell down here. You can't rewind the clock and go back to Thursday and try and catch this sell. You can't. You missed it. You missed the boat. You're going to be forced to sell at a discount if this is what you're looking for price to continue to go short. But based on what we know, is it ideal to find the short? No. Is it ideal to find the long, though? Yes, it is. Could there be a long scenario here? Absolutely. Let's take a look. So let's forget about price rating this buy side. Play it forward. Price rates what? There it goes. Price rates that sell side. We're below 7 a.m. now. Look at the PDA here. We could look at the PDA briefly. Go into 1 minute. Just look at how rigged the market is. It even gives the entry. Look at that. Gives the entry technique. Let me see. Gives it right here. Gives the entry technique right here. The same one. Is that a coincidence that it's the same sequence? The entry is occurring above 7 a.m.'s opening price. It's a fair value gap that runs through a swing point. The swing point's inside the fair value gap and price hits it and respects it. Is that a coincidence? I think not. Look at that. Oh my gosh, that's beautiful. That's beautiful, folks. Look at that. About 8 pips down. That's a good setup. It's a good setup. Price hits out sell side liquidity. So now the fact that we are below, let's forget about this now. Like I said, forget about us breaking that buy side here. The fact that we're below 7 a.m.'s opening price and we're below, it's mainly because we're below the weekly opening price. It's ideal to find a long instead of looking for the short. This is a forced sell because you're selling at a lower price. Who would ever want to sell their products for lower than what they made it for? Let's say you designed a pair of sneakers or a hat or whatever it is, some good or service that you're selling. Why would you sell it at a discount to consumers so that you could take a loss on profit? Doesn't make sense. You're going to sell it for the high. You're going to make a product and sell it for primo, bro. You ain't going to sell it for cheap. So you're forcing this sell here. Play it forward. What are we looking for? Entry idea. Same thing, but inverse. Fair value gap. Right here. Fair value gap. That runs a swing point. And the swing point is inside the fair value gap. Whoa. Same thing happening again. Where does the entry technique occur? And I'm asking somebody in the chat, so I'm trying to engage with you guys, right? Where is this entry occurring? Premium or discount for the kill zone? Below 7. Yes, exactly. Good answer. Discount. Correct. Discount. It's happening below 7 a.m., guys. Look at the clean lows, too. You can even see, look at these clean lows. That price engineered. It's all fake. It made these lows because it knew during New York session, I'm going to run that low and then go higher. That's what it did. Look at that. Oh, my gosh, guys. Oh, my gosh. Bro, I'm telling you, this information is gold. But little does the community know, right? I'm not saying the community doesn't know about it. but it's slowly getting out there. I know besides, ICT Silver Bullet, when that stuff started coming out, etc., etc. In similar fashion, this is technically almost the same idea as ICT Silver Bullet. I'm just using different time periods to find the idea. And I'm framing it a lot different. And when he came out with the Silver Bullet, I was like, dang. I was like, this looks just like what I discovered, which isn't not anything profound, because if anybody is studying the market, you can discover anything. I'm not saying, and I would never sit here and proclaim, oh, I was the first one to discover it. Da 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 da. You get no credit. No, because there's probably thousands of other guys out there in the world that know this model that I'm talking about. They just don't talk about it publicly. They go about their normal lives, their 9 to 5 lives or whatever they got going on in their life, and life is good. They keep everything private. They don't tell the community. Me, I'm gonna tell everybody. I'm gonna run and scream over the hills and tell everybody, yo, I know about this model, bro. I just made this much money, blah, blah. I'm gonna tell everybody, yo, you can make money off of this. You could change your life off of this. I'm telling people this because I want to change people's lives. It's bigger than me. It's not about me. It's not about Deontay. 1-to-1 scenario. Here. Why do I use a 15 pip stop loss? Because I found that it's the best medium of a stop loss. You could even go 10. Like, even if you had to go 10, you could do 10. But I found that sometimes I would be in drawdown for 10 pips and then price turns around. That's what I've been seeing over the last year or two. I would be in drawdown for at least 10 pips and then price runs up. Vice versa. Who the heck just messaged me on Telegram? All right, forget it. Price comes down and then price goes higher. Watch this. Right? TP hit. Let's keep playing it. Let's keep watching. Keep watching it. This is Friday. Look what's happening. Right now we're in London close. This is London close 10 to 12 p.m. That's London close. That whole reversal here is London close. Yep. Let me speed it up. Look what happens with price. Put you back into drawdown. You still don't want to pay the trader? You still want to be greedy with what you've gotten out of the market. Once again, always a learning lesson. Even with the winners, there's still more to be taught. Pay yourself, guys. You won. You got 10 pips. Take something off. Move the stop loss to break even or your entry point. Move it underneath a swing low. And in this formation going higher, you can see. Look at how price creates. Man, it's lovely. When you really love something, man, passionate about it, man. Look at how price is creating higher swing lows and higher swing highs the entire way up. That's bullish structure on the 1 minute time frame. So fractal. Notice, and every fair value gap or every inefficiency that it's creating, every time price gets the opportunity to trade into some type of inefficiency or some type of down close candle, look at how price runs away. There's a fair value gap here. Price never runs into it, sadly. But there's one here. Price runs into it, runs away, creates an inefficiency here. And there's a down close candle too. Price runs into it, runs away. Inefficiency, runs into it, runs away. Inefficiency and a down close candle and down close candles. Price runs into them and runs away. This whole leg here can be seen on the daily chart too. This whole idea that you're seeing on the 1 minute can be seen on the daily, seen on the 2 minute. You're seeing higher swing highs. Think about it. Before we move on to, let's delete this. Yep. This is a 2 minute time frame, right? I'm just picking stuff because it's all everything is teachable. Think about what's the bullish trend formula? Can somebody in the chat answer this question to me? What is the bullish trend formula? What are the two variables to the formula? Bullish trend formula. Anybody in chat? Just type it in the chat. Anybody in the chat. Even if you get it wrong, I'll correct you. Anybody. Take your time. I'll wait. If you hear the audio going mute and it sounds like the audio cut out, it's because I'm blowing my nose. I'll give you guys like 1 minute. Good. All right. Swing high broken. Wait for higher swing low. Thank you. Facts, fam. That's it. Swing high broken plus wait for a higher swing low. Right? Now, I know I'm cherry picking here, of course. We knew that it was going higher based on the model. But I want you to see the sequence and how it's doing it. Because there's only one way it does it. It's only one way it does it. There's no other way because it's coded in a particular way. This is a swing high formation right here on the 2 minute. That's a swing high. Price breaks that swing high. What happens after that swing high is broken? Play it forward. Play it forward. You get a higher swing low. Let me double check to make sure it's a swing low because it looks like a double bottom. Yeah, 2 minute shows a double bottom. Close enough. This would be a higher swing low, right? Compared to this swing low here. Swing low, let's just say this was a higher swing low. It could have been, but it's a double bottom. Maybe on the 1 minute, it looks like a higher swing low. Price does what again? I'm going to keep marking out every single one. This is a low. Let's say this is a low, right? Price breaks another swing high. It resets again. Let's say the formula resets again. Breaks the swing high. What should happen? We should see a higher swing low form. There it is. Higher swing low right there. Price does what again? Breaks another swing high. It's creating liquidity pools and destroying them every single time. It created that swing high. Look at that. It created this swing high just to run it back in the next 3 to 4 minutes. Runs it right there in the next 2 minutes. And it just keeps trending, right? It's all fractal. Now, with that idea in mind, you can start to see how you can utilize and get in trend with the market and start to pyramid with the market. It's not always perfect. I think that is something that is a misconception. Everybody thinks that pyramiding trades is very easy. It's not easy. And the reason I say it's not easy is because even though you may have the confirmation or idea that price is going to go higher, what if you do get a hard pullback, right? You see some type of inefficiency, you want price to trade into it. What if it goes up here, here, and right here where you want to go long again, it does this instead? Ooh, that would hurt. That would hurt. So don't go in chasing or stacking positions thinking that you're going to milk the market because it ain't likely, to be honest. It ain't likely. It's just not. I know you'll see some people like put it in thousands of positions sometimes. It's not even worth it, in my opinion. Because if price just does one subtle swoop in the opposite direction of their trades, they would be in a lot of drawdown. They would probably get a margin call. They're over leveraging, of course, because they're trying to cheat their way out of the market, cheat money out the market. And sometimes that's just not good habits. It's just not good habits. You want to perform good habits. Think about that image of a successful trader. What does he or she look like to you? What does that trader look like? They're not performing and doing certain things. Let's move on to UCAD. So this is the last recap of the weekly range review. So we got three of them here. I just love I love these models, bro. I love them. Love them. Absolutely love them. Before we go forward, I'll give you the full snapshot. Look at that. Look at that. Weekly opening price. Look at where the best buys are happening. Look at where the best sells are happening. This is premium. This is discount. That is premium and that is discount. New York model is happening. This New York model example is happening in a premium. So we clearly know that it's some type of sell setup. Let's take a look. Right over here. Five, 7 a.m. Sound like a broken record, but this is the only way I'm gonna get through with some people that have a tougher learning curve. You gotta show people over and over again. You got to. It's like training someone to be a boxer. You gotta show them how to jab. You gotta show them how to throw a cross, an uppercut, a straight. You gotta keep showing them the same things over and over again. That's the only way people are gonna learn. Swing high, and then we got the lowest low here. Nope, I got the colors backwards. There we go. Always doing something backwards. We're above the weekly opening price. Let's play it forward. See, price comes down. See that? Price comes down, takes out sell side liquidity. But are we looking for longs? Not really. That's what I was trying to tell you. We're not looking for longs because we're above the weekly opening price. This is Sunday's opening price. We're not looking for longs. This dashed line right here is the weekly opening price. Doing too much. SOP, Sunday's opening price. There we go. We got an acronym. Then we got midnight opening price right here. And we'll call that MOP, midnight opening price. We're not looking for a long opportunity. We really want to look for a short because we're above the weekly opening price. That's what we're looking for. So there's conflict in interest here. Price shoots up. News comes out, price shoots up. Phew. Just flies. There we go. So now we have that triple confluence again. The news passed. We got that triple confluence finally. We're above 7 a.m.'s opening price here, which is also the sell side liquidity that was rated here. So just write out 7 a.m. And we're going to look at what happens after running this buy side liquidity. So we got the triple confluence. We're overbought for the kill zone. We're overbought for the intraday day Tuesday. And we're overbought for the weekly range. Go down to the 1 minute time frame. What are we looking for? We're looking for price to give us a fair value gap that runs a swing low, and that swing low is inside the fair value gap. This caused retail traders to chase price. How do I know? Because before this run up, this was happening. They were consolidating the market the entire time. Over, back and forth, back and forth, back and forth, back and forth, back and forth. Shoots, one side. All markets started in a consolidation. So for those that were lucky to get this long, kudos to them. Pats on the back to them. That's good. But for those that may have not been intrigued or really on par with what the market was doing, FOMO. What are they doing? Chase, 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 chase. Where are they buying now? They're buying in a premium. That's foolish. You're buying in a premium based on FOMO because the news drop and you're chasing price. Successful traders do not chase price. Like I said, think back to what I said before. I said earlier, what does a successful trader look to you? If you had to paint the picture in your head, does a successful trader chase price? No, they do not. That trader, that version of yourself that you want to become, that trader does not chase price. Just because the news drops and you see it go up 50 pips, 60 pips, that trader does not chase that price. Absolutely not. That's undisciplined. Play it forward. What does this look like? I could already tell. Like this looks like a bull flag almost forming. Here, right? This stupid pattern that people like to trade. It's trading inside here, then it's going to break out. What is that? That's nonsense. In some case scenarios, we do see the bull flag work. It does work. In a lot of scenarios, does it work? No, not all the time. We don't. Play it forward. There it is. There goes the entry technique. See this? Fair value gap. Here, swing low. You even have another swing low inside of it too. Not that it needs to be two swing lows. It just needs to be one. And it needs to be above 7 a.m.'s opening price. 1-to-1 scenario. We go short. Look for 15 pips. Look for price to tag. Tags us in. We're looking to go short. Yes, we adhere some drawdown. Yes, we leave the kill zone too. I would still hold it. Look at how it hits TP. And look at how, keep playing it. That entire range that it shot up from. Look at how it fills the entire candle. That one candle all the way up. That 1 minute candle was very large. That was over, I don't know. That looks like over like, I don't even know. I was going to say 40. That one candle was 30 pips. And price fills that entire range back down. 30 pips back to the downside. So you see how you go from a 1-to-1 to a 2-to-1? This is 15 pips. Another 15 pips is 30 pips. So that's a 2-to-1 scenario. If you, like I said, if you don't get stopped out, if you get lucky enough to trail your stop without getting stopped out, it's very hard to have a trailing stop because the market is just going to come back and sweep some type of high. Like this high right here, look how price comes up, sweeps this high up here. Then it goes short. It's very hard sometimes. So sometimes keeping a permanent and stagnant stop loss can help you catch a lot more. So if you take the partials and maybe move your stop loss to break even, let's say that even break even would probably be justifiable too. But as soon as you start trailing your stop, you're at more risk of the market coming back and knocking you out the trade every time. Every time. I don't care how you like to frame it, what swing high you put your stop loss above. Sooner or later, you're going to see how easily the market comes back up, takes out the stop, and then leaves you in the dust. You're like, what? Bro, I could have won so much more. It is what it is. That's what you sign up for. Play it forward. Let's see if it gets back down to Sunday's opening price after that sell setup. Wednesday, it was nothing. Yeah, he had the news. Yep, DXY dropped. So the UCAD is going to drop as well. Wednesday, Fed interest rate, Fed conference. So UCAD, Swissy probably dumped, of course. And in here, we're below the weekly opening price. Back 2 a.m. You guys can do this. Like I said, you could teach a child this, what I'm showing you. And I'm not talking about all the little details that I'm talking about. The steps to the model is very simple. Every single step, it's very simple. 2 to 5. Like I said, some people may not have the comprehension yet. That's why I said I show this all the time because I'm trying to lower your learning curve. I want to show you it over and over and over again. This is sell side liquidity. This is Asian lunch right here, midnight to 2. This is buy side. This is 2 a.m. right here. So price is cheap. For the kill zone, price is also below midnight opening price. I'm not going to draw everything out. But go back and do your due diligence, do your homework, study this. I do this too. Every weekend, I go back and I look for these examples just for practice because it's just good to see it and understand. I go through a lot of pairs. I go to UCAD, USWISSY, NU, GU, AU, and I try to see, did any of these models form in its respected area, premium versus discount for the weekly range? Price rates, sell side liquidity. It's below 2 a.m. We're below the weekly opening price. We're looking for a fair value gap that runs a swing high. Let's see if we get one. Right there. Look at that swing high. See, it comes in different forms, in different shapes, and the way it looks. It's a swing high that's all the way over here. Instead of something that's relatively or close to price, it's a swing high that's all the way over here. It's still the same thing. Nothing changes. The entry is occurring in a discount. Ideal. Buy condition. Go long. Do 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 do. 150. 15 pips. Did I just move it? It should be fine. Press play. Man. Price hits it. Yep. Drawdown for sure. Like I said, you ain't always going to get it right. Drawdown. TP. Done. TP. But don't let people discourage you. People like to talk a lot. I don't engage with people that talk a lot of smack personally. People like to be very envious, right? And be very pessimistic about something. I don't truly like to. When you start putting your personal thoughts out there, you're always going to be criticized. When you start putting your opinion out there, you're always going to be criticized. There's always going to be someone telling you no, no, no. It can't be going long. It can't be going short. Trust and believe. I've seen many times when I would say something in the chat, and this is nothing against you guys. Don't take it personal. Like, don't be softies. You know what I mean? I would say, yo, I'm going long on this, right? And let's say I took the entry right here and I sent this to the chat. You know how many people in the chat are going to be like, when they see this happen, they're going to be like, oh my gosh. Oh my gosh. I'm telling you. And I crack up. I crack up and I look at my phone and I put my phone down. I'm just like, man, they don't know what they're talking about. You know, even if it's a loser, even if the trade is a loser, I still stand with the model because I know one day they're going to be like, dang, it actually worked. I know. When this happens, everybody starts barking. Everybody starts getting discouraged. Oh my gosh, it's going to hit stop loss. Oh my gosh, it's not working. The model's not working. Got to believe in it. You got to have faith. You got to have faith. You're not always going to get the best entry. You're not going to be the cream of the crop. Unless you really hard work, you know what I mean? Hard work and determination, you might become the best trader in the world. But even then some, it's difficult to get up there. To understand that I don't know how, right? Who would have known that this was going to be the exact low of the London session? Probably 1% of traders, and however they arrive there, giving them the benefit of the doubt. Play it up, and price shoots. Price shoots, man. That's the whole reason why we use a stop loss, because we know that we may not get the best entry possible, but we get a high quality entry because we brought below the kill zone open. And look at that rocket ship. Oh man, that's beautiful. It's a beautiful trade. Absolutely amazing. And that's the New York model. And that all is happening where? In a discount. Sorry, that's the London model. Let's play it all the way through. Look what happens. That one trade idea. Look at how far it runs for the rest of the day. Look how far it runs without hitting the stop loss. This is what I was saying earlier in the video, earlier in the Zoom call. I said that one of the kill zones is going to be the pivotal moment that sets it off. If you can catch that, you've gotten home run. You got a home run. This is a home run. How many pips is that? Let's just say at the end of the week, go back down here, zoom out, zoom out, zoom out, zoom out, zoom out, zoom out. Here, do it like this. Get it together, D. Go back on the hourly. 100 pips. That's over 100 pips, man. Off of that one turning point in London. Come on. And London was the low of the day. Look at that. London session was the low of the day. New York gave a small retracement, continuation pattern here. Goes higher. Asian session. This is AMD. I can see it. This is AMD. This is accumulation, manipulation, distribution. Let me see. Here, here, here. Yep. Accumulation, Asian session. Look at the green. Manipulation, down below the Asian session low. Runs up. New York session, retracement, distribution. Continues higher. AMD. Man. Shoot, man. What a trade. That was so cool. That was a nice one. And then we have a Friday New York model. Last one, and then we're going to get into dead zones, next topic. I definitely got to take a sip of water. You doing this stuff, man, like talking for a long period of time, man. Whoosh, man. Like, make you dehydrated and parch. 5. Especially me. Because I love this, man. Like, this is my life. I want people to understand this is my life. It's my means of income. You know what I mean? Support my family and myself with this, bro. That's why I go so hard for this stuff. This is what I do. Outside of whatever I do outside of trading, this is what I do. That's why I love this. Passionate, man. All right. Here we go. We're above 7 a.m. Sorry, we're above the weekly open right here. We have our dead zone, London lunch. We're going into 7 a.m. here. Mark that up. Just put it there to be transparent. Let's play it forward. So price does sweep a swing low. Notice here. Price sweeps a swing low, but we're above the weekly opening price. Are we really looking for the long? Not really. Could there be a long scenario here? Yes. But am I going to really look for it? No, because we're above the weekly opening price. I would be forced to be buying in a premium. I don't want to buy in a premium. I want to sell in a premium. So let's play it forward. Price comes up, takes out the swing high here. So this is what I like. Yes, there might have been a buying opportunity here, but it's not ideal. The ideal scenario is about to unfold here. So let's go into 1 minute. So you can see it drops below 7 a.m., makes this BPR, balanced price range. I don't really utilize balanced price range too much in my trading model. And it comes up. This, I can already tell this is a smash day candle. Or sorry, not smash day, but a smash candle. I can already tell just looking at the way it looks. It's so high up. It's above 7 a.m. It looks like it's going to keep rallying higher, and price is going to come back down here and sell right below that low. Let's play it forward. There we go. There goes the entry idea right here. Again. Here. Notice the swing point is inside the fair value gap. It's not here. It's not on the start of the fair value gap. It's not on the end of the fair value gap. No, the swing point is in between the start and the end. Short scenario. I know, I make it look so easy, right? It's not. Took me a while to really start seeing it. There you go. Man, that was quick. Wow, that took less than that happened in like 10 minutes. 10 minutes, you're done. Like, I love days like this. You know, the market gods are looking out for you. Like, yo, I know you got a busy schedule. You got other things to get to. Let me make your day. Let me make your profit. Let me hit your TP so you can get up out of here, not look at the charts anymore, kill your eyes, and be with your loved ones. I love days like that. I love that. Because you really think I want to sit here for the next 4 hours looking at my trade? No, bro. I want to go chill with my little bro, my little brother. I want to go talk to my little brother, see how his day is going, what he got going on, what my dad and mom are doing. I want to call up my homie, my best friend. Yo, what you doing, bro? You want to kick it? Want to do something? Yo, you want to go to the farm? We got to make new beds. Yo, we got to plant some seeds. We got to water. Yo, we got to fix the greenhouse. We got to do I want to do those things. I got other things to do. So when days like this happen, I am thankful. So I don't have to sit there and be like, yo, bro, I'll be there in like 4 hours, bro, because I'm still sitting in a trade. Something like that, you know? I still get up and go because I got the stop loss in. So I can still get up and go. But I like when this happens, so I don't have to worry anymore. I'm chilling. Like, yeah, I made my money, man. You feel like the dude, you feel like that guy. But there goes that sell setup. Where we at? There we go. What does it hit? Sell side. Look how perfect it hits the sell side. Dang, you didn't take profit again? Look at that. I showed you. Yo, it's so funny. I showed you guys this example so many times where price hits the TP and price comes back and hits the stop loss. There are many occurrences like that. You got to pay your trader for the sake of your account, for the sake of your equity. Pay yourself, bro. You woke up early, the middle of the night, wherever you are in the world. I know some of you guys live on another part of the world where when I'm waking up, you're probably going to bed. So you got to force yourself to miss sleep, depending on the kill zone. That's the whole reason why I trade Asian session. I was tired of that. I'm not trading London session, bro. I'm not trading London session. I need to sleep. Health is way more important than my money, bro. I don't care what amount of dollar I could get. I want to sleep. I love sleeping, bro. It's the best feeling to lay in your bed and feel comfortable. Yeah. Weekly range, man. That's your weekly range review. Hopefully that was insightful, and hopefully that made you understand things a little clearer. I'm just gonna grab a sip of water. Got any questions? Let me know. I'm just gonna grab my Yeti real quick and get some water. Just let me know if you got any questions. We're gonna move on to our next topic called dead zones. What are they? Why should traders care about it? And how traders should utilize them? Ah, man. Trade in, man, bro. All right. All right, cool. Let's get into it. It's now currently 11:26 p.m. here in New York. It's about to be midnight. But you know what I'm doing? I'm here talking to you guys because I love y'all. And I want y'all to get this knowledge. I want y'all to progress. So, dead zones. So, what are dead zones? I'm about to talk about it right now. What are dead zones? And you'll see right now. If I go to any pair, let's go New Zealand dollar for US dollar. I'm going to turn on my session indicators. You are going to see these gray areas on my chart. These gray areas on my chart are all the dead zones. Now, there's one session that's not highlighted. I almost have all the kill zones here. The only session I don't have highlighted is London close, which is between New York and New York lunch. That little area right there, that's London close. I haven't put a session indicator for it because I don't trade that session. And I don't really like looking at it too much. But looking at my chart, all the gray areas on my chart is a dead zone. So this is Asian session. Right after Asian session is the Asian lunch. I call it the Asian lunch, at least in my belief system, in my trading system. I call it the Asian lunch. After the London session, there's red zone, there's the London lunch. After this blue session, the New York session, there's the New York lunch. And you start to notice a characteristic. They are all accumulating orders during that time period. That small window, at least for these ones, this one's a lot smaller window. Asian lunch and London lunch, smaller windows of a lunch period. The New York lunch is a larger window period of consolidation. But nonetheless, they all are doing the same thing. They are accumulating buy stop orders and sell stop orders, which equates to what? Market sentiment. It's creating market sentiment. And it's creating a psychological paradigm in everybody's brain. Every single day it does it. Soon as the market starts doing this, I know retail traders are going crazy, bro. They're just overanalyzing. They're like, dang, I don't know if the market's long. I don't know if the market's short, but whatever it is, I gotta be in the market at all times. I need to be trading at all times. If there's a candle that's opening and closing, I need to be in it. That's not what the ideal trader is doing. That trader in your mind that you want to become is not doing that. That trader, that professional trader, or the trader that you have in your mind, that ideal trader, they're not chasing price. And they are more than likely and definitely not trading during certain times of day. That's a part of their rule book. That should be a part of every trader's rule book. There are certain times of the day where you're going to tell yourself, I should never place a buy order or a sell order. The only exception for you doing that during a kill zone, if you're a swing trader, that's the only time. Only time I would allow myself to trade during one of those kill zones is because I'm a swing trader and I'm using stop orders or limit orders, and the market triggers my orders during a dead zone. That's the only reason I would ever enter the market. Outside of that, manually entering a trade, it should never be within any of these gray zones that you see here. And if we look back at any day, notice the same thing over and over again. Look at the consolidation. Look at that. It's so rigged. It's so rigged. But it's better to know. It's better to know. I'm glad that you guys are getting informed. You're not uninformed anymore because now somebody is telling you. Someone's telling you real game. I'm not trying to sugarcoat it with you. I'm not trying to hide anything from you. I'm telling you exactly what's happening. Look how clean that is, bro. Look at that. Look at how right before Asian session, this drop off, 8 a.m. And everybody keeps trying to tell me Asian session starts at 7 a.m. Okay, I guess, But why at 8 p.m. does this large candle open up like that? It's got to be the opening price, guys. And there's no news here either. It's got to be the opening price. It just opened. The traders are flooding into the market there at 8 p.m. opening price. Look at 7 p.m. Hello, where's 7 p.m.? Hold on. 7. The 7 p.m. is over here. Look at 7 p.m. Nothing. Look at 8 p.m. Night and day. Night and day. That's the open of Asian session. But notice, before the Asian session, look at the consolidation during the New York lunch. Look at that consolidation. All markets started in consolidation. Consolidation here in between London and New York. Look at that consolidation. You should not be looking to enter a trade. You should not be looking to enter a trade. Asian lunch, you should not be looking to enter a trade. You shouldn't be, because you're always consolidating in those time periods. Doesn't matter what pair we're looking at. Does this happen for gold? People may ask. This is a good question. You want to see? Here you go. Of course it happens for gold. Gold versus US dollar? Of course it happens for gold. Look at the consolidation. Look at that. Here. Now, you may say, but what about the days like this, Deontay? Like this one. What about a day like this? That's not consolidation. At the end, it is, though. Right? But I wouldn't argue against you. You are right. It isn't really consolidating. It is really ranging, right? Most of it is ranging down. It shot up and then it ranged down. You're going to get moments like that, of course. But 9 times out of 10, or maybe even 10 times out of 10, it's going to be consolidating. Look at that. Look at gold. Look at that. Right before even Asian session. Because Asian session 2 is a characteristic of what? Consolidation. But could we still find a way to get 10, 15, 20 pips out of Asian session? Yes, we can. And we've proved that multiple times with the Asian session model. Even though Asian session has the characteristic to consolidate, we still know we are able to grab pips out of that because we're framing the Asian session off of this session. Every session is being primed more than likely by its previous dead zone. London, look, I'm not going to go down intraday, but just look at how price is forming here with London session. Look at how price comes down, takes out the sell side liquidity during this zone, and then runs right back up to the buy side liquidity. Right? That was what I was studying for about a couple of months. For about 6 to 8 months, I was studying that. I was like, wow, there's something happening here that I'm missing here. I need to dig a little deeper. I need to do my homework. I need to spend countless of hours studying it every day in, day out. I was like, you know what, Deontay? At 8 p.m., you keep noticing the same pattern happening. It runs up and then it goes short so fast, or it runs down and it goes long so fast. What's happening there? What levels is it gauging off of? And I figured out, I was like, oh, there's consolidation happening before Asian session. There's consolidation happening before London session. There's consolidation happening before New York session. And even if it's not in a picture perfect consolidation like this, you can still use that dead zone as a period to find setups. I know this one doesn't look like a clear consolidation, but on the lower time frame, I guarantee you this looks like consolidation at some point, at least towards the last couple hours of this session. There's definitely consolidation or double lows or double bottoms, etc. New York session runs it, and then it goes long. It's night and day. It's all about that opportunity of power three: accumulation, manipulation, distribution. It's happening in every kill zone. So hopefully you find this insightful. Now, this answers what they are, why traders should care about them, because you shouldn't be trading there. You're going to be stuck in consolidation, and how to utilize them. And how I showed you to utilize them was basically all the intraday setups during the weekly range review. So answer those questions. The next topic we're going to talk about is the Asian session range. So after this, the next topic would be counter trend candles. So we're going to talk about the Asian session range. The characteristic of the Asian session, like I said, so trying to segue it, I try to make it flow at least. The characteristic of the Asian session is consolidation, point blank, period. That's what many people have been taught from ICT, that the Asian session kill zone, its characteristic in nature is to consolidate and move sideways. But are there times and moments where the market does trend during the Asian session? Yes, we can see that here. We can see one example here. Out of a plethora, we could pull out a handful of Asian sessions that look just like this, going up or going down. And we can also pull out a plethora of Asian sessions that look just like this, going sideways. Gold tends to consolidate a lot more during this time period. So that's something you got to keep in mind. Not every pair is going to move the same during that kill zone. They move a little different, similar, but a little different. Gold tends to consolidate. But how would I utilize the Asian session? So if I ever get the Asian session consolidating and I am looking for a setup, this is a good example right here. I want to use a different, what is this? February 22nd. Let me use this because I don't want the dead zones on there. You can see this indicator is a little different. It shades the entire zone. I don't like this one. I like the other one. That was the one I was always using. 22nd, 22nd, 22nd. There it is. This is 22nd. So cool. Take a look at this Asian session. This Asian session is consolidating. We can see it's range bound. It doesn't really make significant higher highs or lower lows. It breaks the high, then it comes down. It breaks a low, then it goes back up. So it's stagnant. It's not going anywhere. Let's play it for one more. So here to here. So this is our Asian session high to Asian session low. Take this off now. So we got our Asian session. We'll put it in green. We got our Asian session high. We got our Asian session low. If we are looking to go short for the day, however you arrive to this conclusion, I'm not gonna go back and check to see what the daily bias was and all that stuff. Do your homework on that, But if you happen to go into this day on Thursday, and for some reason you woke up out of your dream and was like, "Yo, I'm going short for gold tomorrow," you should be looking to go short above the Asian session high. That's where you're gonna find the best sell. Always. These are just characteristics to a high probability sell condition. You're not going to look to sell below the Asian session low. There is a twist to that, though, and we'll get to that. But let's play it forward. So we play it forward. Notice how price gets above the Asian session high, right? We play it up. Play it all the way up here. So we got a purge on this Asian session high. So buy side is taken. What do we have left? We have sell side available. This is something I learned from ICT from his free tutorial very early in my career, and I was able to find feasible setups with it. The Asian session highs ran, and I'm like, okay, cool. I want to go short. How can I go short? Now, this is without using any indicators. This is without using any metric of overbroad, oversold, any PD arrays, nothing. If I had to go short, it would have to be either 5 pips above the Asian session high, right? 10 pips above the Asian session high, 15 pips above the Asian session high, 20 pips above the Asian session high, in increments of 5, right? And I would place a sell limit. So price runs up, it hits my sell limit, and I would go short at a certain pip increment above the Asian session high. And I would aim for price to go low and take out the Asian session low. Let's say I missed this Asian session high sell setup, right? Price going up and selling above here. Where else can I sell? I can sell at the Asian low too. I can sell on weakness. Now, when you sell above the Asian session high, you're selling on strength, which means the price was running up. Price was running up, and you sold when the market was strengthening, which is why you use a sell limit. When price goes down, you're selling on weakness with a sell limit. Sorry, a sell stop. So if price were to get back down here, I would use a sell stop at the Asian session low and place a stop loss at the Asian session high. So this is what it would look like. So price comes down. The trader that already sold up here, it's happy, of course. But you came and you were probably a little late to the party. Maybe you woke up late. Maybe you're running late to your office. Maybe your phone died. You had to recharge it. Whatever the case may be. You don't got your laptop, whatever. Right there. Price hits the Asian session low. That's where you would place a sell stop. You would then place your stop loss at the Asian session high or at whatever the highest point is before Asian low was rated, which would be up here somewhere during London session. You can see the Asian high, the high of the day, London high happens at 3 a.m. Not a coincidence at all. 3 a.m. is the heart of the London session. At 3 a.m., normally you're going to be getting the turning point around 2:45, maybe to 3:30ish. That's where everybody's probably on the wrong side of the market by then. Sometimes a little later, sometimes even to 5 a.m. People are still getting pulled to the wrong side, and then it finally turns. But oftentimes, when you study the London session at 3 a.m., the market makes its move right there. I would go short here. And I would look to place my stop loss either back at the Asian session high or just above some type of previous daily high. Such a daily trade, such a swing trader. I'm always talking about the daily time frame. place it above a swing high that forms above the Asian session high. So there's a swing high here. Place a stop loss there. Or place a stop loss up here. Depending on your risk appetite and how much you're risking, you have to allow yourself to pick a stop loss that is reasonable. You can't place your stop loss anywhere if you can't risk that much. You're looking for, I don't know, a 1-to-1. Maybe you're looking for a 2-to-1, a 3-to-1, a 4-to-1, whatever it is, or a draw on some type of projection lower. Let's say this swing low here. You want to see price get here, or maybe even down here. It's a short opportunity. It's not a long-term trade. It's a very short thing. You're looking for 5, 10, 20 pips, 30 pips, not something drastic. You're not looking for 100 pips or a home run here. It's too late. You should have been on time. But since, life happens, you would short here. And you look to see if price will continue to give you short down. Look at how it price targets what? Sell side. There you go. It doesn't take a lot to start framing these ideas, right? What I just showed you is a pretty cookie cutter idea. It's pretty broad. There's a lot of flexibility around it. There's a lot of gray area in it, honestly, right? There's a lot of, because you can say, but what about this? But what about that? A lot of things to go on. But from its true nature of utilizing the Asian session starts everything off. The Asian session gears off London. The London session gears off New York. And everything in between, the dead zones as well, like we talked about. But notice how the Asian high is taken first, then the Asian low is taken second. Interesting, right? Because it's rigged. They were accumulating orders the entire way just to build in market sentiment. Everything in between here is market sentiment. Between this high and low, that's market sentiment. There's a paradigm going on here. There's a psychological paradigm shift going on here. Retail traders are asking themselves or asking their fellow traders in the community on the forums or whatever they, chat rooms or whatever, live chats, they're debating, right? They're arguing. They're trying to come down to a census. They're trying to pick a certain sentiment. Are we long on gold today or are we short the entire night during Asian session or day, depending on where you live? People are trying to figure out what's going to happen. Eventually, light comes today and the market makes its move. And everybody that's either wrong is wrong and everybody that's right is right. But you'll see most of the times the market is most likely going to purge the liquidity pool, counterparty liquidity pool, to go towards the draw. It purged buy side first to go down to the draw to probably take out the previous daily low. Let me just double check. Yeah, you can see it took out the previous daily low. So this is Thursday here. This is Wednesday. Price took out Wednesday's low. It even took out, did it take out Wednesday's high too? Took out Wednesday's high too. So that's an outside bar. So there you go. It took out the high and the low of yesterday. So that's an outside bar candle. And you can see how price, it all started here. Sell above, move down. So that's how I would utilize the Asian session if I had to stick to one model, And this could be the model that you want to use for the rest of your life or your trading career. Maybe this is what you were looking for more simplicity in your model. Maybe you don't want to look down to all the kill zones. Maybe you don't want to look for a 1 minute time frame. Maybe you don't want to do that. Maybe you just want to set it and forget it. I've been there. I already do that. And you'll see how I do that with the next topic we're talking about. So moving into the next topic, we're going to be talking about counter trend candles. And I believe I had a tab up for this. We're going to be using UJ for this example. We're going to be using a lot of things for this example. Now, counter trend candles. Let me take a sip of water. Bear with me. Thank you. Appreciate you guys. Love you guys. All right. Next topic, counter trend candles. This is my most favorite thing in indicating where price is going to go. So it's a very early sign, especially when I'm in a trending environment and I've already have confirmation that price is going higher or confirmation price is going lower. When I get a candle that's opposite to the trend, I have the foresight almost to predict that the next day it's most likely going to be up or down. And what do I mean by that? For example, with hindsight, we see the market is trading up here. I know some people already know this idea. Bear with me. Some people don't. We could see the market trading up. Let's take 1 month, like January. Let's check January. January was bullish. DXY was bullish. Oil, we did oil, US oil for the first pair for 2024. We were tracking oil in January and it went fantastic. So if you ever get a chance to go back on the YouTube channel and go to the playlist 2024 daily tracking and you watch January over, you can hear the commentary of me tracking US oil day to day. And you'll start to hear me say, okay, oil gave a down day. I'm buying tomorrow. Or you should buy here. And the same thing happened for dollar, same thing happened for UJ because they're directly correlated. When dollar goes up, oil goes up, generally speaking. Sometimes the correlation is out of sync for some months or some years sometimes. You can see prices going up. But notice inside of this month, look at every down day. Now, I'm not going to sit here and show you, oh, the swing high was broken, then a higher swing low was broken. I just want to get straight to the meat and potatoes. Look at every down candle for this entire month. No, that doesn't count. That's February. Look at every down candle for this entire month. If you were to just buy after a down candle here and hold, maybe for a day or maybe for a week or two, you would have been in profit. I know. It's crazy when you start to see this. You're like, dang, you know what? You're actually all right. If I would have brought after a down candle, I see the potential reward there. Absolutely. This is the first down day or down candle that we get. The next day, what happens? Price trades up. It does trade down because we know there's always going to be a Judas swing. There's always going to be a fake move all the time on the retail traders, very often. Get traders on the wrong side, then go back in the real direction. Always. That's trading 101 in my trading ideology. There's always going to be a fake move on retail traders every single day. I don't ever go into a day thinking that retail traders never get pulled to the wrong side. Price trades up. Down candle, price trades up. I know they're back-to-back down candles, but overall, you can see how price trades away from down candles. Here, it's coming to the last 2 weeks of the market. Price does consolidate at the end. So not a very good example, but just looking at it. Down candle, up. Down candle, up. So there is some feasibility in it in some conditions. But when the market starts to trend, that's where it's your best friend. Take any month. Let's say we take the month of December. December seasonally is always bearish for DXY. So UJ is going to be bearish too. So that means yen is probably going to be gaining strength in December. Just showing you guys little things, Look at every up candle in this month. Notice what's happening. After those up candles, price is selling off. Up candle, sells off. Up candle, large candle down. Small to large. Large. And it's going from a Wednesday until Thursday. Now, to optimize the idea, now I'm going to get into the entries too. To optimize the idea, I would wait for a certain day to give the counter trend candle. So since Tuesday, Wednesday, and Thursday are my ideal trading days, that means either Monday, Tuesday, or Wednesday, I want to see a counter trend form on it. Let me say that again. Because Tuesday, Wednesday, and Thursday are the ideal trading days of the week, That means I want to see a counter trend candle form on either a Monday, Tuesday, or Wednesday. And you can see here, since the market is trending down, let's say we arrived to the narrative that the market was going to trend lower. This is a counter trend candle that lands on a Wednesday. I have one more ideal trading day. It's Thursday. Notice how Thursday sells off. Now, where would you have sold? Many people may ask, where would I have sold? I would sell at the close of that candle with a buy stop. And I would, sorry, is it buy stop? I always say it backwards. Think a buy limit, right? Buy limit. Price goes up, hits my limit, goes short. I would also get in on the market on a buy stop at this candle's open here. Go short. I learned this idea from ICT's free YouTube. It's on his channel. It's on his channel. Like, this dude's dropped so much content, it's ridiculous. But a lot of people skip around. They say they watched it, but I doubt people really watched every single video. I watch almost every video. Sell limit. Thank you. Sorry. Look at me. Foolish me. I'm always saying things backwards. Thank you, fam. Shout out to the chat. Paying attention there. Sell limit. Correction. So I'm using a sell limit and a sell stop here, since it's a sell setup. And price goes short. Just off of that. Now, there are going to be times when you use this idea, because it's a daily time frame idea. There's going to be some drawdown here. For sure. And we're talking about major drawdown. We're not talking about no 10 pip drawdown. We're not talking about no 50. This one happens to be a very good idea. Little to no drawdown, basically, here. But there are going to be some case scenarios where this candle has a tail that goes up and then it drops. There's going to be drawdown sometimes. Now, for this idea, anywhere from 100 to probably 200 pips of a stop loss would be recommended. And you're looking for the same thing to the downside. You're looking for anywhere from 100 to 250 pips in profit, because it's a trending idea. You're looking to hold this trade for potentially a week or two, a couple days, maybe 5 days, 3 days. You're trying to hold this trade for a very long time. You play it forward, and you could see how if you were to hold that trade idea from here, you would get a lot more, right? A lot more just off of this one idea, because you knew the trend and you found a counter trend candle. It's not going to be perfect all the time. Sneeze. It's not going to be perfect all the time, because you can see here, you had an up candle here. This is Friday, though. See, that's what I said. You got to optimize it. I wouldn't look to trade Monday. No. But I'm glad that an up candle formed on a Monday, because what am I going to do? I'm going to sell on a Tuesday. So a counter trend candle landed on a Monday. I have Tuesday and Wednesday and Thursday to trade on. So I'm glad that it forms on a Monday. I sell. Same idea, same premise. Sell limit at the close, sell stop at the open. You're in short. You're in short on strength and you're in short on weakness. Now, you don't have to take both sides. You don't have to sell on strength, nor do you have to sell on weakness. You could pick one. Maybe you just want to sell on strength. When the market goes up, you want to sell, which is an ideal scenario too. Or when the market goes down, you want to sell. You want to sell on weakness. You can do that too. I personally would prefer, I would prefer to sell on strength. I want to see the market go up and then I sell. I really don't want to see the market go down and then I sell, because I'm kind of giving myself the cheaper sell. I want to give myself the premium sell. I don't want to sell. Get my charger. I don't want to sell at lower prices. I want to sell at higher prices. So I would opt for selling with a sell limit than the sell stop, because I get to sell higher than sell lower. But those that may want to sell with the sell stop, this may give you more confidence because you saw the market open and sell the entire candle all the way down. So you might be a little psychologically you might feel more safe taking the sell instead of taking, because the traders that are selling on strength, they're taking a lot of risk, honestly, right? They're taking the chance that market is not going to continue going higher. They're taking the chance that market's going to go up and then go short. That's a risk. Everything's a risk. But for the traders that are selling down here, it's less of a risk because you watch the market sell the entire time. But what I've noticed too, you'll get moments like this. Price gets down there, triggers you in short, and then there's a hard retracement. That can scare you out of your short. So it's a mental game. There's a paradigm. But if you hold, look what happens. You might be rewarded. If you hold, you might be rewarded. And of course, there's going to be up days. It's not that the market's going to just print, 20 candles, 20 days all down. It's not going to be like that. You're going to get a sprinkle of a couple up candles in a downtrend. And that's how I would utilize counter trend candles. And it's seen on everything. Let's take a look at gold. Since gold's been making like record highs, you know what I mean? It's crazy. Just look at least from the midpoint right here, the turning point. There's like a mid reversal here. It looked like gold was going to continue going short and then reversal. Look at every down candle. If you would have brought after any down candle after this here, this turning point here, man, you would be in a lot of profit right now. This down candle, buy. This down candle, buy. It's a Monday. Look at this. It's a Monday going into Tuesday. Look to buy. And the price runs up. You basically got almost a week in change of all buy side delivery, which is insane. Mega trade, pretty much. Gold's been just flying since 2023. Gold's been flying record highs. So that's how I would be using counter trend candles. It is not something where you could use a small stop loss. You can't use a 5 pip stop loss with this idea. You just can't. If you want to go down on the lower time frame and hunt for a setup based on the limit or the stop order, you can. To reduce the risk to have a smaller stop loss, you can do that as well. Go down intraday, see if you can find a long below this candle's open. Below this candle's open here. And you will. You're going to find the Judas swing and price runs higher. So hopefully that was insightful. So we went through the weekly range review, dead zones, Asian session range utilization, and counter trend candles. So if you have any questions at all, please ask it now because it's currently 12:01 midnight here in New York. And your boy's got to get some sleep. It's been a long week. So if you have anything to say, let me know. Even if you want to say thank you, I appreciate it. How do I pick a pair for next month? Oh, the filtering process. So we talked about this in one of the Forex Fridays. So if you go back to one of the Forex Fridays, I'd recommend you to go back and check that out because I have a whole video talking about it. But in brief summary, I would say, what's the seasonal tendencies looking like? All right. So if you're trading GU, is dollar going to be bullish for April? And is British pound going to be bearish for April? Okay, cool. That checks off because they're going in opposite directions. I don't want the seasonals to be both going in the same direction. Dollar cannot be bullish seasonally, and British pound cannot be bullish seasonally. It just doesn't correspond in correlation. They need to be moving in opposite directions. That's one. So if that checks off, check it off. Cool. Interest rate differentials. What are the central bank's interest rate differentials? Is it high or is it low? Is there a big separation between their interest rates? Is the Bank of England, I'm just taking an example, GU, right? Is the Bank of England and the Feds, do they have a drastic interest rate differential? They do not. I know they don't. I think they're both equal right now. I think they're both at 5.5. So would I want to use GU? No, probably not, because it's a strong fiat currency versus a strong fiat currency. Because the central bank traders are really going to be looking at both currencies and saying, I'm getting the same interest on British pound as I am dollar. Now, I'm not saying it's going to be exactly like that, but based on the simple principle on interest, both accounts are basically the same. It's like you open up a bank account with Chase, or you open up a bank account with Goldman Sachs. You know what I mean? And they have a savings account that both provide a 5.5 interest rate on your money. Which one are you going to go with? You're probably going to be stuck in between, either or, basically. But if you had, Chase with a 5.5 interest rate and Goldman Sachs with a negative interest rate, or a 0% interest rate, which one are you going to go with? The 5.5. So you need to find a currency pair where it's a strong versus weak based on the interest rates. That's another way I like to filter out things. Secondly, the monthly chart. Was the previous month or the month that we're currently in, is it a small range cycle or is it a large range cycle? Did this month that is about to end, did it already run very large or did it run very small? If it ran very large, I probably don't want to touch this pair next month. I probably don't. If it ran really small, I probably more likely want to touch and trade this pair next month because the odds are next month it's going to kick into a large range cycle. That new monthly candle is going to be large and I'm going to get range expansion. And I want range expansion because that's where I make money. The market starts to trend. If the market's already large for 1 month, the next month, the probability of that next month being large, it lowers. Now, to what degree, I don't know. But in general consensus, odds of 2 large candles back to back or 4 large candles back to back, it just keeps lowering. The odds of it lowers because you're going to run into a month where the month consolidates. And you don't want a month that consolidates. You don't want the pair that's going to consolidate. You're going to be upset. And I've shown that before in 2023 daily tracking. I think it was like AU, I think. Yeah, I think it was AU. I forgot what month it was. If you go back and watch that playlist, AU, that entire month consolidated. It was a terrible trading month for AU, but I was trying my best to filter out pairs. But even though with the filtering process, I still happened to pick a pair that still consolidated. So I still tried my best to filter out the pair, but I still ended up with a pair that consolidated. So hopefully that makes sense, my friend. I think the previous Forex Fridays that we did, or I think the last two, you could go through. I even put the timeline in it, the timestamps in there, so you can see. We talk about the filtering process for picking pairs for next month. So hopefully that answers your question. Let's see. Learning is unstoppable. I appreciate it, my G. Today, new thing. Yeah, I'm glad you learned something new. Yeah, the Asian session range can be utilized to help you find simple setups. You need to understand what the Asian session is doing. If the Asian session is trending, odds are you don't want to touch London. That's another tip too. We talked about that before. Ways to avoid London session. So if the Asian session is like very large, like if the Asian session is larger than 40 pips and smaller than 20 pips, London session is going to be a little funky. It's going to probably trade a little weird. It's not going to give you a clean Judas swing. It will give you a Judas swing, but it's probably going to take a while for it to give it to you. But when you see the Asian session is in consolidation and it's between 20 to 40 pips, and you also have a news event during the London session, you're probably going to have a great London session to trade. It's going to be a very clean, dynamic PA. The price action is going to be really clean. So I'm glad that I was able to teach that and expose that to you. Like I said, I give credit to other people that have taught me. Like I said, person that mentored me, ICT. Paid mentorship was cool. The free mentorship was cool, etc., etc. I got my own wings. I flew off the nest, and now I'm doing my own thing. And was trying to spread the word. That's it. I always give credit to him. Many people say I don't give credit to Michael. I give credit to the dude. Do I use everything that he teaches? No, I do not. I don't, because you don't need everything. You need one trading model to change your life. Just one. You don't need 50 trading models, guys. Stop thinking that. You just need one. And that one is going to set you free. Become that master of that one trade. Do the same thing every single day. Stop being inconsistent, bro. People want to see gains in the gym. They don't go to the gym. People want to get bigger arms and a bigger chest. They don't do no push-ups. How are you ever going to gain weight if you don't eat enough food and do push-ups or do whatever it takes to actually get towards those goals? You got to do the same thing every day. You can't stop. You want to lose weight, but you don't work out. You don't do cardio. You don't cut your calories. You don't do this. You don't do certain things. You want to have a better vocabulary. You don't read books, bro. You don't read books. You want to speak with a higher vernacular. You don't read books. How are you ever going to talk on a higher playing field? Right? You want to be good at this? You got to do it every day. You want to be good at martial arts. You don't practice kicking. You don't practice punching. You want to be good at soccer or football. You don't kick. You don't do enough kicks. You want to be good at basketball. You don't do enough free throws or dribbling. Whatever it is, bro, just do it every day. That's what I'm trying to tell you. I was trying to tell one of my friends a while ago. I was like, bro, I've gotten to a point in my career. You know what I mean? Not to brag. Gotten to a point in my career. I was like, bro, I know how to read price action, daily draw, so good. It's crazy. I was like, bro, I've never seen myself read the markets on a day-to-day perspective like I have ever, bro. Ever. And you guys seen it. Been trying to show you guys, like, bro, this is how you read the daily chart, bro. This is how you read trend formula. And then once you got the trend, everything else follows, bro. So I love you guys, man. I appreciate you guys coming out. Whoever, even if there was like one person right now watching, bro. I don't even know how many people are watching because I don't care. I'm doing this for y'all. Even if I get through the one person, I'm happy. On that note, good night, guys. I see you guys on Monday. Peace.